want to get a read on what's happening in tech, you better check in with Avnet, AVT, which I like to think of as the largest supermarket of technology on Earth, and I love to get its pulse. Avnet's the #1 distributor of electronic components, including semiconductors, as well as being one of the largest suppliers of information technology hardware, software, and services. And it is the best at what it does. Now, Avnet reported this morning the company delivered a 9-cent earnings beat. Wow. Off a $1.03 basis, higher than expected sales that increased 1.9% year over year and 2.6% versus the previous quarter. And while the guidance is pretty solid, Avnet stock barely budged on the news. Come on. Run up in anticipation of a pretty good quarter. So let's check in with Rick Hamada, the CEO of Avnet, to learn more about the quarter and where his company's headed. Mr. Hamada, welcome back to Mad Money.
Thank you, Jim. Pleasure to be here.
All right, Rick, you're the only company I talked to that actually was led by Europe. I mean, how's that possible?
Yeah, all I can tell you, Jim, is that we continue to execute very well on our component side of the house, and we've had a recovery story with our computer business in Europe that now has 2 or 3 quarters of sustained momentum behind it. And overall, I think the European market's being underestimated on how strong it is for the industrial sector.
Is that possible because it had underinvested because it was much later coming out of the recession?
Well, I think that on our call today, we explained that we thought that the refresh cycle for technology was a little bit delayed due to coming out of the last downturn. That's what we're seeing today. And then on the component side of the business, a lot of concentration for us in the central region, particularly around Germany. And we think the exports have kept that part of the economy going pretty well for Europe.
Got it. Now, so in other words, you're one of the people in an anomalous situation. The weaker dollars really helped your customers, but at the same time, the stronger dollars helped your customers because the weaker euros allowed them to export more, but the translation from the euro is not that great for you guys.
That is absolutely right. Those European products have become more competitive on the global stage, but it does translate into less calories when we get back to the U.S. dollar financial statements.
All right, now, Rick, I'm looking at the continuous industry transformation you guys talk about. You're really the only other guys who talk like I do. It's secular, it's the social, it's mobility, it's big data analytics, and cloud. No let up, continuing strength in the Internet of Things semiconductor revenue market?
Absolutely, Jim. Technology is still a great place to be, and all these forces of change are creating wonderful new opportunities to implement technology to help solve some of these problems and extend the digital platforms for all these businesses. Put me in the camp that says all the businesses today are digital businesses. And how does it impact your business? How do you create value for your customers and suppliers? How do you gain more efficiencies out of your supply chains overall? And we're seeing it play out across that broad base of industrial customers that we have the honor and privilege of serving.
Okay, in the Intel quarter, at one point, Stacy Smith, who's terrific CFO, came very close to saying, listen, there is kind of a bottom going on in PCs, but it's because the new PCs have a lot of power to it. Willing to say that you think that maybe PCs have bottomed, even though it's been a secular downturn?
So, Jim, I always stay away from calling bottoms, but we did comment on our call today for the portion of our business in that computing component space that's related to the PC business. We did say we do see signs of stabilizing taking place, and we've been matching our resources assigned to that business accordingly.
You would be the early guy. I mean, you would be the first guy to be able to see that. Certainly the PC companies wouldn't all know.
Well, I tell you, I think we're more coincident with what's going on in the industry as opposed to necessarily too much in front or behind it, Jim. We're that's a pretty tight supply chain over there where demand signals translate into supply chain impacts in pretty short order.
You know, Rick, I was thrown off today. A company I really like, and they've been on air. It's called, I know that I'm not asking you to give up any sensitivity stuff here, but NXP Semi, which is really in the heart of Internet of Things, automotive, and they've got that near field, which I love. And they gave really, I'm going to say it, horrendous guidance. Now, I mean, what could a company in that industry, forget them, but what would a company that is playing in what is basically the mobile and social and cloud business see on the horizon that would be so bad?
So, Jim, I haven't read all the commentary there, but I know Mr. Cramer and team know their markets very, very well overall. Generally, whenever I hear of major disconnects from one of our key suppliers, my first suspicion is always that there's something going on at the top of the triangle in that direct customer space that distribution, by the way, generally doesn't have visibility into or serve. There's something going on at the very top of their customer triangle with some kind of change or shift or some type of technology refresh or something going on that's causing a disruption from them from an overall direct perspective. So it's not uncommon for that to happen. And as you said, I certainly don't want to speak for any of my suppliers, but that's usually my first suspicion. What's going on in the direct space versus going on with the broad base that we serve?
Okay, Asia, particularly again, I know it's become a common pattern when we speak. Asia's just not that good. Now, this is the fastest growing region in the world.
No, you're absolutely right. Our regional scorecard said, Europe was the strongest, followed by the Americas, and then for September quarter, which was a change, was actually that Asia was at the bottom of the list, but it was more a situation of growth slowing down as opposed to a major shift from positive to negative overall. We're watching it closely. We also have staged some inventory, getting ready for this December quarter in anticipation of some supply chain engagements that we are planning on for this particular quarter, and it was baked into the guidance we laid out for December, Jim, which is very much in line with what we would expect to be normal seasonality for both our businesses.
Seeing really what I regard as a step up in buyback. Nothing the cheapest investment is in your own stock right now, not any other little company to buy?
Jim, we view it as an investment. It's exactly the way we phrased it. We've always tried to communicate clear and consistent capital allocation priorities. And we said when we believe our own equity is a very good investment, we're going to step up and do it. And we did so to the tune of about $145 million last quarter.
That's about, I mean, you're buying back 5% of the company. I mean, that's a real statement. I've seen when you're not been in the market at all.
We are very disciplined about our approach, and we still have over $400 million in authorization outstanding at this point.
Look, I just think this is a great buy. Of always a great window, but a great buy on the situation, particularly because I think the turn is at hand. I know I'm ahead of a lot of other people in this, but yeah, I can be wrong. But when I listen to people like you, and I listen to Intel, and I listen to some of the companies, Texas Instruments, I'm feeling much more upbeat about the group. Rick Hamada, CEO of Avnet. Great to see you, sir.
Thank you, Jim.
Lower risk way to play technology, and I want you in some technology. That's Avnet. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.